Good morning. It's Friday, February 21st, about 5:30 a.m. Central Time. Couldn't sleep last night. Actually stayed up, watched that exciting game in the NHL. We had USA versus Canada. Canada won 3-2 in overtime, so congratulations to them. Always a great matchup, always a lot of camaraderie around that. I was bantering with one of the Canadian neighbors over here. We were talking a bunch of smack back and forth. So, one housekeeping announcement. I will be on the Schwab Network at 2:40 p.m. Central Time this afternoon, so be sure to check it out. It's always a fun discussion on the commodity markets. We kind of give an outlook on what's coming ahead into the next week, a little bit of a recap of what's going on here. So we saw some volatility yesterday in the markets, not only in the equities, but in the precious metals. Something noteworthy is that we've seen gold reach these all-time highs overnight. And then once you get to the cash open and you get closer to the U.S. Open here, we've seen futures decline in the session when that U.S. market opens. That's why it's really important, I think, to have a futures trading account. So thanks for joining me today. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So let's get you ready for the trading day. Let's look at precious metals. Let's look at futures. Let's look at commodity markets. So we saw April gold futures. They did reach an all-time high. It was 29.7340 yesterday. When did that happen? 4:25 a.m. Central Time, long before the cash opening. That's why I say, send an email to info@Blue Line Futures if you'd like to open up a futures trading account. Now, looking at the overnight ranges here, the last is trading at 29.47. The overnight high, which happened right after about 5 p.m., it was between like 5 and 6 p.m., we saw it, the market hit 29.6470. Many of you have been working that sell order up at that 29.64 level here. We identified it kind of a few days ago here, and that was the first attempt that we made at the all-time high. Prices stalled out around there. Excuse me. So what we're seeing is a lot of resistance in that area, and then the market's kind of working its way down. Now, this is healthy because the market is either going to consolidate and then power forward, and then what it'll end up having is it'll have a much stronger base to build on to go up. What you don't really want to see is that market kind of stretch itself thin up to the $3,000 level, because then it could have a sharp setback. So kind of joking around with a couple buddies, and they were asking me what I thought was going to happen in the gold market. And I said that if we don't build in the consolidation, go up and have a much stronger base going forward, we're probably going to see something where the market closes at 29.85. We break through 3,000. The chasers come in, rides up to about 3,040, 3,050, and then it ends up falling about $80 to $100 on broad-based liquidation. Central banks might lighten up. Financial institutions might sell. You're going to get your mining companies. They're all going to start hedging aggressively. Something to note is that a lot of people attack short sellers, and they say they're short selling in the metals markets. Well, the reality is that many of those short sellers out there, those are mining operations. They've got to short. They've got to smooth out their revenue stream going forward. And why not do it with gold at all-time highs and silver, putting yourself profitable? So that's just something to note there, is that there's a tool for people to use, and it's the futures markets, and that's where the short sellers come in on the mining operations here. It just makes total sense. So looking at March silver, the high in the overnight session was 33.54. The low was 33.08.5. This is for the March contract. What's the significance of the low? Well, that was the previous day's low. So what you want to do is you want to keep an eye on that level on March, and then you're going to also want to work your way into May if you're trading those futures, because you're going to run out of time on the March one coming up here pretty soon, and you're going to have to get over to May anyways. And with the market kind of gyrating back and forth here, holding these key levels, you're going to want to look and see where was 33.08.5 on that May contract, and it could be some level of support there. Perhaps it's going to be around that 33.40 range. Now, the gold-silver ratio sits at about 88 to 1, so right in the middle of where we were at last Friday. We had that explosive move. Don't really like that candlestick on the Friday there, kind of leaving us that open tail, but it's so close. It's been about a week since it's been there that it's not really relevant at that point. It doesn't indicate any kind of top on the silver market. I think that, feelings aside, I think that silver should start to work its way up to about 35. where it's going to run into some more trouble here because of historical levels of resistance when you start to go back. So let's take a look at some of those market moving headlines, and then I'm going to hit back on the gold and silver market. So yesterday we did see the S&P 500. It slipped a bit here. The Nasdaq also fell about 0.5%. It was the Dow Jones that fell 1%. Not too many people trade as much in the Dow Jones. Mostly the S&P 500 has been the contract that I've favored the most, at least recently, because I think with the new administration, we're going to see a broad base lift on many of these different stocks here. That's why like equal-lighted S&P has done really well here recently, and then things like the Nasdaq haven't done so well. But we also did see the small caps. They fell about just under about 1% here, matching about the Dow. So the stocks fell. I was on Walmart's earnings here, and we saw the big banks decline. So Walmart, they really disappointed on the forecast, and it was concerned about the behavior and the global economic growth, and that's what led to the S&P 500 and Dow falling. So Walmart shares, they've doubled since December 2023, so there was really no room here for disappointment. We also saw JP Morgan and Goldman Sachs, they fell about 3.5%, so there was a lot of concern about consumer spending and things like that, and the market's dealing with a whole range of risks here. And when you get near these all-time highs, they really start to weigh in and focus on different things. Everything from like tariff to inflation, geopolitics, valuations. So you got a lot of analysts out there kind of predicting that we might need some kind of correction in order for things to build again and then take off again. Corrections are healthy because they let new market participants come into the market here. So, if we get a correction in things like gold and silver, copper, aluminum, all the markets that you watch, new participants are able to come into that market because they tend to be a little bit gun shy and a little bit leery as far as potentially buying the top. So we saw Walmart, it fell about 6.5%. It's been a great stock here. And oddly enough, if you do get a recession and you do get tough economic times, Walmart seems to have performed well in the past. So, could have been a buy the dip opportunity, things like that. So not a recommendation on Walmart, just an observation on why the U.S. equities fell here. And then looking at the yields, looking at the dollar index, the dollar did decline to its lowest level since December. So that is something noteworthy. We got a little bit of an uptick here on the dollar here this morning, up about 25 basis points. We also saw the 10-year Treasury yield. That slid about 3 basis points down to about 4.5%. So those are some things to look at. Now looking at the inflation commodities, because a lot of people think that like gold is the best indicator of inflation, but I really think that it's oil, and I think that it's some of the food commodities and things like that, because it weighs in and the consumer really feels it and whatnot more at the grocery store and also at the pump. So you go with oil here, it's set for a weekly advance, and its biggest weekly gain here since early January. It's due to like this increasing supply concerns, uncertainty. There's a lot of factors around it as far as, is OPEC, are they delaying that production increase out to April? And then also you had a drone strike that hit it disrupted a pipeline, and it's the Kazakhstan output. So it's a lot of unclear uncertainties here. So we saw WTI, it rose to about $73 here. We're up to $72.77. We're kind of at the lower end of the session right now, down about 1%. A lot of people, they've been trading this oil market, and the way that the oil has traded was we saw this big kind of run up here, and then we saw this sell off when it was Trump got in the office talking, drill baby drill, and maybe relaxing some of these tariffs and things like that. Then we saw maximum effort on maximum pressure, at least on Iran. We saw markets come up, and then he said, hey, maybe we'll make a deal, and prices have come down. So we're seeing this big up, down, and that's why it's been kind of a little bit of an emotional state. Remember, markets, they only trend about 20% of the time. The other 80% is more like a chop or a range. Even gold was in $150 range for a while. You saw silver in this like $3 range where we couldn't get out of. $29.25 was the double bottom. We would get up to about 31.5, maybe $32, and we would fail from there. We just traded in this big range back and forth. And ranges do create short-term opportunities. That's why a lot of times having multiple contracts on. Remember, trading futures is almost like harvesting a bonsai tree. You want to pick and prune and trim and trade around there, taking a little off, adding a little bit on, and things like that. So looking at some other things in the commodity markets. I did read a story, and this is one that I'm going to check out over the weekend, that it was saying that oil options, they're betting big on crude oil breaking out to $100 a barrel. So we could see what could possibly drive that. Maybe just total Middle East just coming unraveled again. Who knows here? Or maybe some supply disruptions, whatever. But natural gas, that's another market to look at as far as inflation's concerns, because we saw CME, it hit record volume on natural gas, at least on the option markets here, because of this polar vortex we're seeing even down in Florida. It's like 30 degrees right now. If we had any kind of precipitation, we would have seen another snowfall, and I recorded 4.5 inches on the beach just a little while ago. So we saw those natural gas options, 633,000 contracts traded on February 19th, and that had way surpassed the previous all-time high here, and it was the biggest one, or the second highest volume for natural gas futures ever, with about 1.4 million contracts traded. So the record was set back in November 2018, and I think that's when we had that breakout, and they blew up that optionsellers.com, those poor guys there. So natural gas up over 150% in the last 12 months. We got a little bit of reversal here. We fell about 15% yesterday, back up about 3% here today. So just a lot of volatility. At least the 15% was over the previous two sessions. Now we're coming back up here about 2%. So looking at one other thing on the inflation front, you do have cocoa futures. That's one of the worst performing commodities overnight, down about 2%, falling quite a bit back here. If you traded with me over the last like 10, 15 years, we almost always had active positions in the cocoa market, and then it just got a little bit wild in there with these massive swings here. So it was the sales of next season's crop in the Ivory Coast, a little bit slower than expected here, and that's why in those high prices, people are looking for alternatives rather than buying cocoa, and that's why prices are coming down here. So get into the gold and silver, what you guys are waiting for. So a lot of things here. My email box, it's just been flooded with stories here, with people sending me all kinds of things. And if you know me, I'm really more of a technician than a fundamentalist, because you could sit there and you could sell yourself on these fundamental stories, and you could really drink the Kool-Aid and get yourself down this deep rabbit hole of a lot of things. But the reality is that 9 times out of 10, the technicals are just going to tell you the which way to go here on these markets, and the technicals have factored in many of these different stories here. So it was saying that gold had paired its gains as Treasury Secretary Bessent. He played down, revaluing the U.S. reserves, and gold prices, they've got this thing locked in where they've got it set at $42 an ounce. And Bessent said he had not what he had in mind, which was revaluing it to these all-time highs, because those prices have been set since 1973 and would deliver a one-time windfall of like $750 billion of the government, and would reduce the need to issue bonds. Now, if the valuation of that is that high of the amount of gold that we have, you throw in a couple other asset classes, couple reserve things like the amount of Bitcoin we have from like Silk Road or whatever it came from. You throw in the silver that we have, a couple other strategic items, and then hey, maybe our US dollar is backed by a bunch of different assets and stuff. So who knows, that'll probably trigger some people. So some other gold headlines here. Precious metals, it hit, the gold had hit its successive record in 2024, climbed 27%, off to a great start already this year. Goldman Sachs coming out with a $3,100 an ounce, saying that stronger than expected central bank buying would be the key driver this year. And then if you look at gold futures, I mean, if we could hover around this level here, it's going to be the 8th straight weekly advance. And it's really, they're saying geopolitical tensions, and what they're thinking is that if we back down from our war effort in Ukraine, Russia is somehow advanced, and then all of a sudden geopolitical tensions are somehow escalating here. I think it's a lot of propaganda by the media pushing that one out here, but it's the unwind of the U.S. American support for Ukraine, and they're saying that safe haven demand is picking up. So you look at some of the holdings for exchange-backed ETFs, they'd swelled to the highest in almost a year. You got spot gold pushing up here, and then the ETF funds, 339,000 troy ounces of gold was added to the holdings, bringing this year's net total purchases of 1.3 million ounces, the biggest one-day increase since January 20th. So when you see gold make a new all-time high, and then you look and you see ETF holdings reach record levels like what we saw on the fourth straight day of growth, the largest one thing, those are people coming in and they're buying the top. They're really chasing here. And then if you look at the silver market, silver kind of backed off a bit, and I think it could be some people rotating from one contract to the next here. We did see it cut 1.56 million ounces in the holdings, and it brings this net year sales to 14 million ounces. So reducing a little bit of silver, going into the gold, and obviously that's how you get the gold silver ratio just creeping up here a little bit. One thing I'm going to be covering next week on CNBC is aluminum. It is a contract that we trade here. Every dollar move on aluminum is going to be $25 in someone's account. The only catchy thing about it is that the front month tends to move around a lot. So right now it's May, but I wouldn't be surprised if it ends up being April, March, and it's just kind of all over the place here. So you really got to pick and choose what month you're going to go into and monitor open interest and volume. So you do have aluminum rising for the fifth day towards in its highest close in almost 9 months. It's down a little bit here today. European Union wants to back off gradual purchases of the Russian metal, and that's really what threatening the supplies here. So Russian shipments have fallen as manufacturers are looking for alternatives out there. Also, these aluminum tariffs and things like that, they could be the reason why we've seen prices push up. So some key events today, you got some Eurozone manufacturing PMI, and then you have the S&P, the global manufacturing and services PMI, existing home sales, consumer sentiment, all coming out here later today. So quite a lengthy video here, had a lot to unpack, but if you guys got any questions, give me a call, 312-858-7303. Remember, futures option trading, it does involve risk of loss. It may not be suitable to all investors. Good luck, good trading.